Let's talk about Twilio instead, Steve.
Okay, yeah, I've got Twilio's earnings, but really, I don't really want to talk about them too much because.
All right, fine. Let's talk about Airbnb.
It's all about kind of the news that came out. Well, it actually came out the day before, but when you add the two together, it's quite an interesting little story. But I'll just quickly run you through the day before earnings. So Twilio announced that they were laying off another 17% of their staff. So 5 months ago they laid off 11, now they're laying off another 17. And when that happens the day before earnings, you usually think, oh, we're in a bit of trouble here. This is not going to be very good. But I'll just give you a quick overview. So Twilio is about 4 billion revenue run rate at the moment, zero profit. It's long touted that it could make some profit. But its major issues are really it's sort of incredibly egregiously issuing its own stock to pay its staff and reinvesting into itself, making tons of acquisitions. And that's worked until now. But it's been really, really badly punished in the markets over the last sort of 18 months. It's down 82% from near $500 to about $75 at the time of recording. But it went as low as $45. So a really, really big fall. So it's a comms company, essentially. It's got a few bits bolted on to challenge sort of branches of Salesforce and the CRM market. It's still growing at 35% year on year, according to its last statement. And now it is actually promising to pivot to profitability. So as I said, it's laying off 17% of its staff, and it's announced a $1 billion buyback to try and sort of counter some of that dilution. So Chief Executive Jeff Lawson, he wrote in his letter to employees, at that time, we sought to streamline the company as it was then structured. Today's news, however, is more driven by the need to organise ourselves differently for success, and the changes are needed to enact this new structure. The company also said it would be permanently closing a number of office locations. There's impairment losses of around 10 to 25 million coming. There's already been an impairment loss of 100 million in the third quarter, which was more office closures. So they reckon that they can model 20% op margins in the near future. So if we factor that in today, they're trading at about 17.5 times earnings. And remember, we are in full imagination mode here. And this obviously gets cheaper if they manage to grow the top line with a 20% op margin. They're actually only guiding for 15% revenue growth. But at the moment, I think in this scenario, in this macro environment, I think we're okay with that. So what I really wanted to talk to you guys is about sort of thinking about how quickly Airbnb did this and how effective it was. Is this beyond the reach of Twilio and the wider sort of tech environment? I don't think it is. And if all tech companies do this will make life much easier for us because, you know, rather than having to guess margins, we're gonna actually see margins. But do you guys have any thoughts on the Twilio idea here? And the wider pivot that we're seeing in tech to sort of prove that they're viable companies?
I feel like there's kind of sneak profitability going on here, right? So you said 4 billion run rate revenue, market cap is 13. Did you say $1 billion in buybacks?
Yeah, $1 billion in buybacks.
I mean, that's got to be coming from somewhere, right? You can't just take that out of losses, or you can't just take out $1 billion in debt with a market cap of whatever, 14 times that or something, and then hope to kind of do that. So that sort of indicates to me that, yeah, pivot to profitability is not so hard to do. The issue with unprofitable tech that I've always had is you need to be able to see your way to profitability, because sometimes you look and you see a pattern going of, okay, losses followed by smaller losses followed by smaller losses, and then we cross over into profitability, and you can see that line kind of arcing upwards. But it doesn't always go that way. I mean, some of the time it goes losses, bigger losses, bigger losses, bigger losses, as we kind of achieve scale, and then it kind of snaps over into profitability like that, and you kind of, it's hard to work out how that path looks. I think this is probably highly variable from company to company, so I'm okay with the idea that Twilio can do it. I'm not sure I take any wider lessons from that about what tech sector can do more broadly, and I say that as a shareholder of Guidewire, who have been doing loads of buybacks with their unprofitable operations as well.
Interesting, because very interesting on the bigger side of the tech, the problems that we're getting pushing the stock prices down is lower margins, right? That's going to be the story for 2023, is can these big companies keep their margins high? Google example, for the past 20 years, their operating margin has been 20%, bob on every single year. But in these past 3 years, that margin has been shrinking. That's off the top of my head. I think it's down to about 60 now. Sorry if I got that wrong. I'm doing that off the top of my head. But I did see a margin chart, a chart the other day of Google's margin, and it does look like it's slipping. Similar story with the other big techs. Similar story is going to come with Facebook and things like that. That's what they're worried about. This could be a capex thing, loads of stuff like that. But what's happening in the smaller cap tech seems to be these margin expansions, which, like you're saying, you got to figure out that's where it's coming from. The other thing with the stock buybacks, I'm interested in because is Airbnb doing a stock buyback as well?
They've been doing them for a while. Yeah, they did a buyback,
Yeah.
a 1.5 billion buyback last year, and they're authorising more at the moment. So I think I saw Tim Byers fully caffeinated, ready to go. He was talking about that today.
He was quite critical of that, I think, last year.
Critical, yeah. He wanted a bolt-on acquisition. I think Airbnb's big
interesting.
problem is Airbnb doesn't want to buy anything. It's a bit like Adyen. It kind of likes to build everything because it has the Airbnb sort of spin on it. I don't really think Airbnb has anything major that it needs to go out and get at the moment, which leads to the question of when you're generating as much money as Airbnb currently are, well, what do you do with your cash? I mean, we'd be sort of remiss to say buybacks are well valued at the moment, but they can't just have 500 billion on the balance sheet, can they?
Yeah, I'm coming back to you on that one because I will come back to you on that because I always have to bring Booking.com, who have their earnings on 23rd. I'm looking closely at that one because I'm a fan of Booking.com over Airbnb right now, and they've done me really well. The share buybacks thing, I'm just looking at Twilio's shares outstanding, going up quite considerably every single year. Is this a thing? Salesforce got really, there's a lot of friction over Salesforce's outstanding shares and stock-based compensation, which no one is classing as a cost right now, versus their buybacks. So because Salesforce has got all this flack for its stock-based compensation, I wonder if these smaller companies are trying to hide their stock-based compensation with these buybacks. I think it's going both ways. I think I can see both sides of this thing. Either way, really good time to buy buybacks if you've got the cash, because a lot of these companies are still 20, 30, 40, 50, 60% down. So really good time to buy for most of these companies probably, but also a lot of stock-based compensation going out there, and I wonder if it's trying to cover up a narrative. That was kind of what I was thinking there.
Twilio's stock-based compensation is mostly because they use their stock to make acquisitions. There is a lot of stock-based compensation as well, and they actually released a chart which kind of explained it to you. So they said, look, when we make an acquisition, we obviously have acquired not just the idea, but the talent that comes with that idea. So for the first 4 years, they give quite egregious stock-based compensation to these people to encourage them to stay and deliver on the idea that they create. In the 5th year, though, stock-based compensation really, really tails off. So what Twilio are trying to say is we're going to pivot to profitability. We're going to offer £1 billion in buybacks to just negate that dilution. Mm-hmm. But as a lot of these companies were bought in the past, some of them are getting to the 5-year period now, and the others are obviously getting closer as these ones approach. So they think you're eventually going to see a flattening or a tail off in stock-based compensation. I mean, let's not say Airbnb are buying back stock. They're issuing stock at the same kind of rate. They've bought back $1.5 billion of Airbnb stock, but the actual share count is fairly level. So all they're doing is negating the dilution by stock-based compensation. And if all tech companies get to that kind of level, I think that's a really positive thing. But then you could just pay your staff.
This is true. I mean, the problem is in big tech right now is that they are being paid. They are being paid a lot, but they're also getting the SBC as well. So the time of that really good time of massages and jacuzzis and stuff in the tech world are gone. However, I will, defend Airbnb on this one. Airbnb have not done that. They were very smart during the whole thing. They did their layoffs very early, and they only let go of 1,000 people or something silly like that, didn't they? It wasn't a lot at all.
remember in COVID, Airbnb had negative revenue. So, I
Yeah.
mean, if you can just think about that even as a concept, that's kind of crazy. That is just like, opening the windows and throwing money out of it, and running your business like that. But the pivot to profitability from Airbnb is absolutely crazy. I mean, we're talking about sort of Q2 20, their EBIT margins were minus 20%. And today, as of the last report, they're plus 23%. So it's like a 48% swing in percentage points to profitability.
What did they?
What's
what
that?
did
1,
they
2, 3, 4,
turn
5,
on?
6, 8 quarters?
Yeah, what did they turn on? What happened? Is
Well,
it COVID or is it?
No, it's efficiency, isn't it? I think it does. It takes a business being on the brink of bankruptcy to realise, perhaps, maybe if we add a few billion in the bank account and COVID happens again, we'll be all right. But Chesky has done a remarkable job at running an efficient business. Don't forget, this business, while it's been doing this, has still been growing at 40-odd%. It grew up 40% last year, and its revenues nearly in the tens of billions, which is. They're crazy numbers, 10 to 14 billion is a massive upswing in business. While you're doing it and maintaining profitability. This isn't scattergun, going out and selling £2 for £1 just to, have a lot of revenue. This is doing it with, every pound that you spend, 25p of it's going onto the bottom line. That's good growth.
I think it definitely is. I always bring it up. I do worry about the moat. I see the moat as simply their brand, and that's that. And I don't particularly class that. Just me personally, I don't particularly class that as a particularly strong moat out of the 4 or 5 moats that there are out there. Airbnb stock up. Let's have a look. 68% year to date, and Booking.com is up 24%. That Booking.com releases its earnings on February 23rd. It's the one I'm watching. I want to see how these two compare. So
but what moat does Booking.com have?
It doesn't. The point is, it's behind, and when you're behind, the one ahead is the only one left to go. What I don't think is happening right now is that the space in the renting out your home space is being eaten up. I don't think there's much competition in that area. I think it's Booking.com and Airbnb at the moment, and that other one is Verbo, which is like the higher class one. I don't know what that is. What I do think is being eaten into, and where the market share is feeding into these companies right now is hotels. Yeah, you're right. So I think hotels are probably struggling quite a bit. I think we might see a problem here. There is this idea of everyone's currently coming back and going on holiday. I don't think that period's over yet. I personally think that that's still happening. I know a few people out there are saying that the whole everyone's back to normal now, and everyone's done all the traveling that they were going to do. They've all had this, they've just spurted out everywhere all over the world and gone on their travels. I don't think that's over. I think people are still affected by COVID, and people are still going out and doing their traveling. So I wouldn't be surprised if there's still money being brought forward here. I wouldn't be surprised at that.